1979 was the biggest annual move for gold in history. We just haven't seen anything like it since. Until now. So we've pointed out that the 2025 gold rally is historic. 40% year-to-date gain. That outpaces the 2020 COVID spike. It outpaces the 2011 spike. Really, it outpaces anything that we've seen all the way back to 1979, 46 years ago. That is the year of the most dramatic move in gold's history, and something that everyone would say has blown away anything that we've seen since. Well, that isn't actually true. Now, to explain this, we need to take a look at gold price in 1979. At the start of the year, gold was trading around $226 per ounce. By the end of the year, it had surged to about 512, so that's a 126% gain in just 12 months. Far more than this year's 40%. But if we were to look at how that 126% gain played out month by month, well, I have to show you. When we break this down, something really stands out. By September of 1979, gold was up just over 40% year to date. And that is essentially the same as where we are now in 2025. So at the moment, we aren't looking at the biggest rally since 1979. We're actually matching it. You have to go all the way back to 1973, the year that Nixon abandoned Bretton Woods, just to find something bigger. And given the scale of that event, I don't even think you can use that as a comparison. So any of these articles talking about how we're seeing the biggest bull run since 1979 feel a little bit lazy because 2025 isn't over yet. And 1979 has not yet beat this run. So if you've been staying ahead of this, adding to your position, you're still on the right side of the biggest run in gold's history. Now, don't worry, I didn't turn this into a hype channel. We're still just here to be realistic, throw some gold coins around, but this is a little bit of factual data that I have not seen reported anywhere. 2025 is currently on par with the biggest year in gold's history. Let that sink in. Now, just to be realistic here, to match 1979 all the way through December, gold would have to end this year at $5,935. And that is probably not going to happen. But the fact that we're even on the same track tells you just how wild this year has been. Now, before we write that off, what would it take to match the final 3.5 months of 1979? Well, it would take a shock. Back then in 1979, you had inflation running double digits, you had oil prices spiking from the Iranian Revolution, and you had Paul Volcker just stepping in as Fed chair. He took a pretty aggressive stance on interest rates. Now, all of that led to a loss of confidence in the dollar, which might sound familiar, but anyone who was there at that time would probably tell you it was very different. There was a surge of private investment demand, both retail and institutional, and it's important to note that while all that was happening, central banks were actually selling into that demand. So very different set of circumstances. The U.S. Treasury auctioned off over 500 tons of gold between 1975 and 1979. And 500 tons, that's more than 16 million ounces. IMF sold another 400 tons into the market, and even the Soviet Union was selling during oil revenue swings. So those were the drivers in 1979. You could say similar loss of confidence in the dollar today, but the specific conditions were very different. Now, personally, I'm okay not having a 2025 shock that would drive gold up another 60% like we saw in 1979. Here's what that price curve looked like, by the way. You can see things escalated. So if you think about what kind of shock it would take to get there, well, it would require a heavy shift in Fed policy, some kind of shakeup in the Fed itself, maybe another round of economic chaos, or something even bigger. Something leading to a collapse of confidence in the dollar itself rather than just a slide. That's what drove gold vertical back in 1979, and again, I'd be happiest not seeing that repeat. But here's something to keep in mind here. We got to this point, this 40% gain, even before the Fed's September rate cut, and without any of those 1979 drivers. No double-digit inflation, no spiking oil prices, no Paul Volcker slamming rates into the teens. So we might not be looking at gold following the angle of the curve from 1979 with that final 60% gain, but we are looking at a rally that's already matched historic levels for the first 9 months of the year under far less shocking conditions. So the question now is where today's rally goes from here. Now I'm going to give 3 fundamental reasons that I think the price of gold is going to continue to go up. But first, I have a sponsor I want to cover. The sponsor of today's video is a gold copper exploration and development opportunity right here on U.S. soil. It's U.S. Gold Mining, Inc. They trade on the NASDAQ with the ticker symbol USGO, and their flagship project, Whistler, is the closest large undeveloped gold copper exploration project to the main population center of Anchorage. Now, Alaska has been important for the Trump administration. Trump issued an executive order on day 1 of his presidency called Unleashing Alaska's Extraordinary Resource Potential. And then the administration issued a second executive order called Immediate Measures to Increase American Mineral Production. Now, this executive order directs government agencies to take immediate action to facilitate domestic mineral production to the maximum extent possible. And we can see here that includes copper and gold. Now, in addition to federal tailwinds, support at the state level couldn't be stronger. Alaska Governor Mike Dunleavy is a strong proponent of economic growth and the infrastructure to support mining in his state. Now, he's been to the U.S. Gold Mining Project himself, and along with support from the governor, U.S. Senator Lisa Murkowski has visited as well. Now, in April 2023, U.S. Gold Mining went public with the symbol USGO on the NASDAQ for $10 a share. Now, the gold price back then was just below $2,000 per ounce. We've seen gold price climb well over $3,600 per ounce this past week, but the stock is currently trading around or below IPO levels. Now, looking at the Whistler project, the mineral resource estimate comprises 294 million tons at 0.68 grams per ton gold equivalent for 6.48 million ounces gold equivalent indicated, plus 198 million tons at 0.65 grams per ton gold equivalent for 4.16 million ounces gold equivalent inferred. You should review U.S. Gold Mining's latest annual report on Form 10-K and the technical report summary incorporated in it for information on the project and the mineral resource estimate. Right now, U.S. Gold Mining's share price is trading at or below April 2023 when it was spun off and went public. Now, while other factors can impact stock performance, I think this supports a further look. And here's where this gets interesting. The company's ownership structure is quite unique. 78% of the outstanding shares are held by the parent company, so one shareholder controls 78% of the shares. Another 4.5% is held by management and insiders, so over 80% of the shares are tightly held, and I guess this is what I would want to see. And now, one of the company's most important moments since inception is here. U.S. Gold Mining has begun the process of a preliminary economic assessment, PEA, a preliminary review of economic factors. And the timing couldn't be any better with gold around $3,600 and copper at $4.50 a pound. So do your own extensive research on U.S. Gold Mining, ticker symbol USGO on the NASDAQ. This is an Alaska play that I think is worth your time. Now make sure you review U.S. Gold Mining's annual report and other filings with the SEC when you do your research. I'll have links in the description with more info. Okay, I mentioned 3 reasons that I think we'll continue to see gains in gold. It's easy to simply say we're early in the rally or repeat some kind of broad opinion like the dollar is doomed, but I think there are far more specific factors, and I'll give you my big 3. The first reason is state demand, central banks. For the first time since 1996, gold has surpassed U.S. Treasuries in central bank reserves. And I don't see that trend reversing. As I pointed out earlier, central banks were net sellers back in 1979, but they've been net buyers for years now. And that shift alone has been a huge driver of the current rally. The second is private demand. So funds and portfolios. We've gotten to this point in the rally without much participation from private or institutional investors. But that's all starting to change. This price run has just become too big to ignore. It's drawing a lot of attention. Now we're seeing a wave of big bank analysts calling for $4,000 gold. But if you were to look at the numbers, Bank of America tells us the average fund allocation is still only 2.4%. And they're suggesting that performance like this will push managers to allocate a lot more to it in the months ahead. And the third reason is the policy backdrop. So not just who's buying gold, but why. U.S. debt is over 120% of GDP now, and Treasury supply just keeps ballooning. So that pushes capital away from Treasuries and into gold. And it does it for all investors, foreign governments, private investors, and even individuals. So now add in the Fed's policy shift and you have falling yields, and is one more reason to move away from the dollar. Well, there aren't very many stable alternatives, so gold is the obvious beneficiary here. So that's the state of the rally in my view. Wide demand, both state and private, and then policy pressure adding to it. This is all pushing gold in the same direction, up. Now, I started off pointing out that the first 9 months of 2025 have matched the first 9 months of the most significant run in gold's history. And I also pointed out that we probably won't track those final 3 months. And that was really the biggest part of what led to that 126% annual gain in 1979. So let's bring it all back to that. Now, I don't expect gold to go straight up the final 3 months like it did in 1979. That isn't likely. And actually, it's not even something that I'd hope for. When I give those 3 reasons pushing gold up, I would expect something more like 5% growth the remainder of the year rather than 60. Now, that might not seem exciting, but that would still take gold to $3,850 by the end of the year. And I'd be plenty happy with that personally. So let's call it good there. Let us know what you think about the remaining 3 months of 2025, whether you knew that we were currently on par with the biggest annual move in gold's history. Kind of a crazy statistic, really. I say 5% more. Let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.